when is the right moment to invest, to buy cryptocurrency or stocks? All markets just crashed significantly. We can see it, the S&P, the Nasdaq, all the big indices, everything's down, crypto got slaughtered. Is now the right moment to buy? A lot of people ask exactly that question, and therefore I want to give you a short introduction into the fundamentals on when is the right moment to buy stocks or crypto. Generally, something that's very important, you have to differentiate between active portfolio managing and passive portfolio managing. Hence, there's active and passive strategies. I would not recommend you to go all in one strategy. I would recommend you to trying out both strategies and then seeing which strategy works better for you, which strategy yields better results for you, and then you can sort of compete with those two strategies and then decide the one that works better for you. So let's start with the passive strategy. If you go on for passive strategy, the best moment to buy is always. Yeah, that's true. So let's just imagine you just got $1 million, maybe your dad gave it to you, you inherited it, and you ask yourself, when is the best moment to invest? If you go for passive strategy, that means buy and hold, you should start right now, because you don't want to time the market. Nobody can time the market. For passive strategies, two things are important. First of all, you have to you have to get a global diversified portfolio with negative correlations. Negative correlations and diversified, that's very important. Diversified means you need between 10 to 30 different stocks. 10 to 30 different stocks, but those stocks have to be with negative correlation. That means if one stock goes up, you expect the other stock to go down. So it equals out and you don't lose. The important thing about passive management is you don't want to time the market. What you want is a portfolio that is not losing, and then you reinvest the cash flow you get from your stock investment. So that's a passive portfolio strategy. That means you just buy, for example, the market, or you look for companies that are making cash flows, that are profitable, and that is very important because right now a lot of people are invested in plenty of tech stocks. Tech stocks seem to be very interesting, but to be honest, the problem with tech stocks is that most of them don't have cash flows yet. They're not profitable. They don't make money yet. That means that they're losing right now. So, number one, negative correlated global diversified portfolio. Number two, you have to buy on fundamental criteria. So those stocks need to be profitable. That's for the active portfolio. For the passive portfolio. If you want to go for an active strategy, what you actually want to do is you have to take two things into account. Because you have to be careful, because they're a little contradictory. So let's start with the first one. Whenever something goes up, it will come down again. Whenever something goes significantly drops, it will go up again. That's just the law. So whenever a stock or cryptocurrency is selling, for example, 30% in the last 24 hours like Ethereum did, probabilities are very high that you're gonna have a bounce. So whenever something's extremely oversold, it will reverse to the mean. That means you will have a positive reaction rally. It's called a relief rally. The problem with those relief rallies is they can get quite difficult to time, because just because something dropped 30% does not mean that it will not drop further 30% before you will have the bounce. So you have to be very careful, because often with those stocks or whatever that corrected a lot, they will correct further before you get the relief rally. But that's one reason to buy, just because something is heavily oversold. Something that's very important to keep in mind, that when you buy after something got heavily oversold, you have to sell immediately after you got the bounce. Most people get the bounce, then they don't sell because they have hope and they think the bear market is not over yet and everything will correct and everything will continue. No, it won't. If you go for a strategy where you sell and where you buy after a big correction, you have to sell the bounce. It's very important, because otherwise you're going to lose your money. And then there is the second reason where you should really get with conviction into a trade is when you have higher probabilities of making money with the trade. That means you have higher probabilities of selling for more expensive the stocks or crypto you just bought than you bought it. That means you have to buy when the trend is your friend. Just keep in mind, the trend is your friend. That means if a stock or crypto is on an uptrend, you buy. And you wait for a while and you sell. Keep in mind, you don't just buy because it is cheap, because something which is cheap most of the time ends up being cheaper. Something which is expensive often ends up being more expensive. So you want to buy something that has shown relative strength. So in a bear market, for example, you want to buy something that, even though we have a bear market, has not corrected that much, because you want to get into relative strength. That's very important. So you buy when the trend is your friend. When you have a confirmed upward trend, then you buy, because then you have higher probabilities of being able to sell the same stock for more expensive later on. That's with a short video. I wanted to keep you updated. When is the right moment to buy and when is the right moment to sell? We're going to be talking in a different video. So keep that in mind. Markets are pretty dense right now. And you should really be careful not to lose money right now, because right now is the time to preserve your capital to then when markets will switch and change over, which they will at some point. We just don't know when. You will have enough capital to deploy to make sweet returns. See you in the next video.